Hi all, this is Steve Money, the market chartist on behalf of ForexFraud.com. And we're now going to take a look at both the Australian dollar and the New Zealand dollar versus the US dollar and potential basing structures for these two currencies versus the US currency as we go through now into early to mid December. Well, the Australian dollar v US dollar in here having had this strong rally from early to mid-November in here, and more recently pushing up to poke at this resistance area we've been flagging, 73.82 to 73.83, chart and retracement barriers. We just poked above there up to 73.85. Not quite enough on Friday for us to signal that this is a confirmed basing structure and shifting us more bullish, but we do look for potential up through there going into the early part of this week, back up through 73.85 and this 82.83 area would then fully signal a basing structure, and then open upside risk going into mid to latter December and the year end up to 74.40, 74.99, and potentially even higher targets towards a 76 handle for year end. Moving on to New Zealand dollar, not quite as bullish in here. Basing structure from August, September, then topping structure October, early November, then another basing structure in November in here, all of which leaves the market at the upper end of the range environment, the range being 62.32 to 68.97 hour range, but at the upper end there, and real risk for a push up above 68.97 again, which would confirm this larger basing structure, almost a head and shoulders, inverse head and shoulders type basing structure in here with potential through 68.97, and then that would open up far higher targets towards 69 and 70 targets as we go through into year end, but still needs qualification above 68.97. Going back to Aussie dollar, still needing a push through 73.82, 85 for a better base. This has been Steve Money, the market chartist on behalf of ForexFraud.com, and I wish you a great trade.